My name is Rick Dwyer. As Richard said, I'm the CEO and a co-founder of Liquid Mining. We're going to go at a very high level today, but this is also meant to be a ask me anything. So as we get to the end, if you have any questions, feel free to put them in the chat, and we'll go ahead and answer those when we get to the end of the presentation. So let's go ahead and jump right in it. But before I do, I want to make one thing really clear. We do not give legal or accounting advice or financial advice for that matter. So if you have any questions around that, please speak to the appropriate professional that you currently work with. Okie dokie. So what do we do? Well, we mine Bitcoin and Bitcoin Cash. And how mining works is there is electricity that comes into little boxes that are called ASIC miners. And ASIC is just an acronym. It stands for Application Specific Integrated Circuit. But really, it's just a dumb box. It does one thing. It does it really, really well. It looks for what are called hashes, which are cryptographically encrypted strings of letters and numbers. And all mining is it's looking for a solution to a puzzle, which we'll talk about in just a little bit. But the way we mine is that it's very predictable income. We know almost exactly how much we're going to make any given day. And so the end result is we have electricity coming in one side, we have the machines in the middle, and then we have Bitcoin coming out the other side. It's really quite simple. It's almost like having a piece of rental real estate. The difference being is that these machines are generating Bitcoin. We don't have any receivables. We don't have to find any tenants. We get no tenant complaints. We don't have a marketing department, sales department. We don't have receivables. It's just a really great business. So why are we called liquid mining? Well, we use immersion cooling, which is a really advanced way of improving the performance of your equipment. And it does so by removing the heat about 1,200 times more efficiently than air. So why is that important? Well, if you eliminate dust, heat, and vibration from your electronic equipment, it can literally last indefinitely. So we eliminate all three through the use of immersion cooling. And that's what you see in the picture to your right. The equipment is dunked into a fluid called a dielectric fluid, which does not conduct electricity. And it keeps our equipment very, very cool. And it makes it so that it operates super efficiently. In fact, so efficiently that we can operate the equipment about 50% at greater capacity than it's rated for, and with no degradation in performance, which is really exciting because it's almost like getting one free machine for every two you buy. And the reason I said almost free is that we still have to invest the money into the immersion cooling equipment. So here's the bottom line with an investment in liquid mining. We wanted to set this up so that the investors would feel secure in their investment as well as getting a steady return. So what you see on this chart is that with liquid mining, you're secured by the equipment, which we'll go over again in just a minute. And you're also receiving a monthly return on your investment. And currently that's running at a floor rate of 10%. And all that means is that our minimum return that we pay is 10% annually, and it's paid every single month. In fact, it's paid on the 10th of the following month from the end of each month. And what I've shown up here is that if you wanted a secured investment but didn't pay interest, you could actually directly invest in Bitcoin. And then we have some of the larger mining companies that are currently on the market, and they involve common stock. So you're not getting a secured investment with monthly returns, and your investment is going to fluctuate with the market on a day-to-day basis. And there's no one thing is right for everybody, but that's how we decided to set it up, is that we wanted our investors to be able to get a return on their capital while we're waiting for either a public offering or a merger acquisition, which we actually will talk about in just a few minutes. So why do we feel our way is better? Well, number one, as we said, any equipment that we purchase with the proceeds from the seed round acts as not only a way for us to generate Bitcoin, but it also is security for our investors. We can't encumber it. The only time we can sell it is if we're going to upgrade it with like or better performance on the equipment. In addition to that, we also have that 10% floor rate we already talked about, and that's paid monthly. And there's literally no limit to how much that interest can be. Once again, it's currently 10%, but there's a formula that's built into our offering document, and we test that every single month. And as our capacity continues to increase, we will reach a point where the interest will far exceed the 10% level. And as a result of that, we actually had to reincorporate in Nevada, because we were a Florida corporation, and we would have run into an issue with the state of Florida if we paid interest over 18%. So we went ahead and did that, and that's already been taken care of. We are now a Nevada corporation. We also have traction. We have our initial team members fully in place. We have all of our power agreements in place. The initial equipment to get us up to $8,000 a day in revenue is already in place. And all the vendor relationships that we need to get all the equipment that we require for Bitcoin mining, they're all in place, and we've actually been buying quite a bit of equipment from them. So we have that as well. The only thing that we need at this point to really continue to scale is access to the right capital. So let's talk about Bitcoin production. Currently, we produce or just over 1 Bitcoin a month. By the end of August of this year, so in a little over a month from now, we should be up to 8 Bitcoins a month. By the end of September, we're hoping to have our seed round closed out by the end of September. That would bring us up to 25 Bitcoins a month. And then if nothing else happened, if everything just stayed the same, no difference in income that we're currently earning on Bitcoin, just from organic growth, from reinvesting in new equipment, we would be at 224 Bitcoins a month by September of 2024, or just 1 year from now. So pretty substantial growth, but the reason for that is we're taking the vast majority of money that we're making and putting it back into the company to grow its production. So another area I wanted to cover real quick, I'm going to go back to that prior slide for a second. So one of the interesting things about how we operate, we operate very lean. We don't have a lot of overhead, and we don't plan on having a lot of overhead. And for that reason, our EBITDA, or our earnings before interest, taxes, depreciation, and amortization, is 40% of our gross revenue. And that's a pretty substantial EBITDA number, pretty much on par with software companies. They actually can be a little bit higher, but we have a very strong EBITDA number, which we're able to reinvest. And part of the reason that we have such a high number is that due to the current tax laws, we're able to depreciate our equipment at a substantial rate, which shelters all of the income that we're making. Now that's up to change down the road, but by then we hope to have our production at a point where it's still going to be pretty substantial. So here's how the 7 million that we're raising is going to be allocated. As you can see, the vast majority is going to the mining equipment and to the immersion cooling equipment. Infrastructure, there are certain things that we have to do when we get in a building. We just added 2 more buildings. We're doing the development of those buildings right now. One of them will be ready in about 2 weeks to start getting our immersion cooling equipment set up in there. We're planning on doing a Reg A offering. If you don't know what that is, that's another filing that you make with the SEC. We plan on doing that in the first quarter of 24. After that filing is complete, we will list those shares on the secondary market. And one of the unique features about our offering, we gave several protections to the investors. One is that you have the security of the equipment being purchased as security for your investment. That's number one. Number two, we're paying a rate of return that has the ability to grow as our profitability increases. Number three, if you elect to, you can convert your investment to common shares at a 20% discount. So when we do the Reg A offering, let's just assume for a second that the offering is $10. So if you had a 20% discount, you could convert your current investment to common at $8 versus $10, giving you another increase in your return. And last but not least, at the end of 36 months, you can return your instrument and receive the face amount back to you in cash. So you get to cash it out and within 36 months if you haven't converted it to common and already sold it. Last but not least, we are planning on doing an S1 registration, which is an IPO, and that would happen about 12 to 14 months after we complete the Reg A offering, because that will allow us to deploy all of that capital and get a really good operational cash flow going and show that we're not only executing on our business plan, but exceeding the expectations. With that offering, any common stock that's been issued to investors will be registered, so it'll be freely tradable at that point as well. Last but not least, we've tried to put the investor in total control of what happens with their investment in liquid mining, meaning that the only time we could force you to convert is if we're involved in some sort of merger or acquisition. And even then, if you feel that that's not a wise investment for you at that time, you don't have to convert. You can redeem the full face amount of your investment at that time. So once again, we tried to structure this so that you were in the catbird seat the entire time. If there's something going on that you don't want to participate in, you don't have to. It's always up to you. And before I go on, I just want to give a quick example of how some of our numbers work, because we based everything pretty much on 8 cents in our pro forma. So I'm going to stop sharing this screen, and I'm actually going to go to a different screen. So give me 1 second. Okay, so here's a spreadsheet. What I'm showing you is the full 7 million, and just to pick up on that right now, we're approaching 3.5 million. Actually, by this time next week, we'll be over the 3.5 million, closer to 4 million point. So we have about 3 to 3.5 million left to come in, and so we're making really good headway on that. What I'm showing you here is that this is approximately how much capacity we currently have. At the completion of the seed round, as you can see here, we'll be up somewhere around 300 petahashes. And we expect that that number is actually going to be closer to somewhere in the 325 to 350 range. But let's just go with the 300 that we're showing here. You can see at that range that, let me put my glasses because it looks a little small on my screen. At just 8 cents, which is around where it's been for the last several months, the interest rate would be 13.6%. If nothing changed, as you notice that we don't have any projections in here on Bitcoin income going up at all, it would be 29.5% in year 2 and then 64% in year 3. Now, this is all predicated on the income that we're currently earning on Bitcoin not changing. So we're not projecting any growth of Bitcoin. We're not projecting any growth in our ability to earn more money. But what I did want to show you is where it's been pretty recently. So I just want to show you what happens if it goes to 10 cents and 12 cents. And what that means is it's 8 cents a day per terahash. So if you're running let's just call it 300,000 petahashes a day, that works out to be about $2,400 a day that you're earning, and the numbers just keep going up from there. So at 10 cents, that number, jumps up to where we're making $891. And if you weren't watching it, it goes from 712 in that field right there. And by going up 2 cents, it goes from 712 to 891. But more importantly, look at the return number. Over here, it jumped all the way up to 25%, then 71, and then 200. Those are based on just that particular year. So these are not cumulative. These are just for the specific year. So that's pretty impressive growth. I was going to show the 12 cents, but just keep in mind that Bitcoin income per terahash was in the upper teens last year, and this was after the drop, and they went as low as 6 cents. Actually, I think the upper fives, and now we're back in the pretty much the 7.5 to 8.5 cent range. And with what's called the halving, which is about to happen around April of 2024, the amount of Bitcoin that's earned when you solve a puzzle and get what's called the block reward, that block reward is going to drop from 6.5 Bitcoins to 3 1/8 Bitcoins. So the amount of Bitcoins that are going to be coming out on a daily basis is going to drop from 900 a day to 450 a day. And that's the way Bitcoin was designed. It was designed so that as the adoption and growth of use for Bitcoin, goes up, that the amount of Bitcoin available drops. And the reason that they do that is so that you have what's called a negative inflation. And it's not only deflationary, but it actually reaches a point where no more Bitcoin is ever issued. And the total amount of Bitcoin that will ever be issued is 21 million. And we can have a long discussion about how that number is actually slightly overinflated, because a lot of Bitcoin's already been lost by people that either passed away and didn't give their relatives some way of getting access to their Bitcoin, or they lost their machines, they forgot how to get to their machines. And so there's a lot of Bitcoin that's already been lost, and it's estimated to be about 4 million Bitcoin. So right now, there's probably only about 15 million Bitcoin that's actually totally available for use. So with that, Richard, I'd rather just get into questions and answer questions for people and see what's on their mind. I could talk all day long about this, but I'd rather answer questions that people would like to know the answers to.
Awesome. Thank you for that presentation, Rick. Yeah, so as we said, this is the Q&A portion of our webinar today. We do have some questions here right now. What sets you apart from any other Bitcoin mining company?
So I think there's a couple things. Number one, we don't believe in just holding on to Bitcoin, and they're called hodlers, hold on for dear life. And the reason for that is if we just hold on to an asset and hope that it goes up, that is a strategy, but it's not one that we're going to employ. We'd rather have that Bitcoin converted into new equipment and exponentially expand our operations and generate even more Bitcoin. So to us, locking up the value of your cash in Bitcoin and not redeploying it doesn't make a lot of sense. So that's one aspect. A lot of miners mine Bitcoin, hold a certain amount, and then sell it later on as they need to generate cash flow. We would rather just generate the cash flow. So I think that's one big difference. The other difference is that as I said in the presentation, we operate very lean. We have right now only 3 employees monitoring everything, and we could probably sustain that level all the way up to probably that 350 petahash to 400 petahash range. But quite frankly, after we get the next or the completion of the seed round, we're going to increase that to 2 more techs. And that will enable us to have 24-hour service, because at that point we have enough machines. We're going to want to make sure they're working nonstop. And we have software that we can monitor all of our equipment from any device that's connected to the internet, whether it's a phone or computer or tablet. And so we do monitor the equipment 24/7. If something goes on, which is very, very rare, then we could either shut it down or reboot it remotely. It's very rare that we actually have to be at the facility to do something with the equipment, even though we do man the facility every single day. If there's any more that you'd like to know on what we think sets us apart, happy to go in further detail. But I think those are the main things. We operate extremely lean from an expense side. We also don't hold on to our Bitcoin. We convert it to cash to keep growing our enterprise value.
Awesome. Thank you for that, Rick. How does the immersion cooling technology compare to traditional air cooling methods in terms of energy efficiency and performance?
So whether you're air cooling or using immersion cooling, you're taking away heat. One does it through the movement of air across the circuitry within the ASIC, and with immersion cooling, it's the liquid that's taken away the heat. The heat that's transferred through cooling is just 1,200 times more efficient, which allows us not only to keep the equipment very cool, even in hotter temperatures, but it also allows us to capture that heat more efficiently as well. In other words, we could take heat, and we're actually in discussions with a couple building owners to take the heat captured from immersion cooling to heat their buildings. So that's just another resource that we get to provide to other business owners as a way to heat their buildings. You can heat hot water. You could actually do this at a citywide level if you were generating enough capacity to do that, which would effectively generate free heat for everybody. So there are a couple different things that you can do with immersion cooling that you just can't do with air cooling. And one of the other main things, I mean, I talked about the efficiency of cooling, but when you're air cooling, even if you use filters, there's still dust particles that are coming through. And eventually those dust particles are going to impact your equipment. You have to turn them down, you have to blow them out, vacuum them, you have to keep them clean. Some miners don't do that. They just run them for X number of years and then get rid of them. With immersion cooling, you don't have to do that at all. The equipment never gets dirty, doesn't vibrate, nothing ever happens. It just stays really clean.
Thank you for that. How does liquid mining handle market fluctuations?
Well, let's see. We've been mining since January 2022, where the market was substantially higher than it is today. And we saw it go all the way down to, I guess, 15.5, I think was the low that was set during the summer of, let's see, 2022. So we've seen the lows and we've seen the highs. And what you see during that time is as things get low, less and less people are mining because the profitability disappears. And therefore, you're not competing with as many people. So when you're mining, there's the price of Bitcoin is part of the impact on how much you're earning. The other part is called the difficulty rate. And Bitcoin is meant to be solved, that puzzle we were talking about that allows the miner who finds that solution to earn a block reward is set to be maintained at about every 10 minutes. And how they make those adjustments is through what they call the difficulty rate. So if people are finding the solution to a block or the puzzle to mine Bitcoin faster than every 10 minutes, they increase the difficulty rate. And conversely, if people are finding it way slower than every 10 minutes, then they'll reduce the difficulty rate. So that difficulty rate fluctuates all the time. And you can actually Google a difficulty rate chart and you will see how it changes. The trend, though, has been up and to the right. Oops, I saw my camera would be this way. So up and to the right is how the difficulty rate has been increasing over time. I'd say the biggest advantage that we have is that we got into Bitcoin mining and had to adapt very quickly to a increasing hash price or difficulty rate and a decreasing Bitcoin price. So our whole operation is built around being very lean and still being able to generate a substantial profit with what is a high difficulty rate and still a relatively low income per terahash. So we are built around that model. So if Bitcoin income per terahash were to go exponential, which we fully expect it will do at some point, we don't know when, we do expect that will happen over the course of the next 12 to 14 months when the halving happens in around next April. We expect that we'll be very well poised to take advantage of how we've structured our entire business. So the fluctuation does have the ability to impact pricing on what we're earning, but it's really the difficulty rate that's had the greatest impact. And what's happened, even though Bitcoin went from around 16.6 at the beginning of the year to around 31,000, right now it's just under 30. The price of what we're earning has stayed in a very, very tight band of around 7.5 to 8.5 cents. So that's the area that we expect it to pretty much stay in until we see some sort of breakout.
Awesome, awesome. And that leads me into another question that we have here. How does liquid mining optimize its mining facilities for maximum productivity and cost effectiveness?
Yeah, so I think it's almost like any business where you want to maximize your efficiency is that you try and keep the same types of equipment so that if you have issues, you're diagnosing the same equipment over and over again, which makes that a lot easier. Plus, when you're maintaining spare parts, you don't have to have an infinite number of different parts for different types of machines. So we pretty much have zeroed in on basically one manufacturer. We use two, but the majority of our machines are from one manufacturer. And so our power supplies, our control cards, everything that we have in backup are all for that. In fact, we do a lot of our own analysis of issues that come up with machines and are able to fix most of them in-house. And if something comes up where we know there's a chip that's a problem on, say, one of the hashing boards, which are the boards that actually have the ASIC chips on them, then we send the machines out to a service center. We deal with several of them. The closest one, the one we work with the most, is actually in Chicago. We send it there, they fix it and get it back to us, and we get it right back in line and working. So I think one of the ways we optimize what we're doing is by streamlining the equipment that we use, the vendors that we use, and also I think that we look for facilities where we can not only get the power, but we're not paying top rate for that facility itself. The facility itself doesn't have to be beautiful. It just has to be functional, preferably all concrete. And this way it's harder to break into. And since I'm touching on security a little bit, we maintain video surveillance both inside and outside the building 24/7. When we come into a building, we not relock all the doors. We do that, but we also make sure all the door closures are brand new, that somebody can't just pry a steel door open. And so we take a lot of effort to make sure that while the building is, we're not going to say you can't break into it, we make it very difficult. And by the time someone was trying to break into it, the video surveillance would have already called the police and they would be on their way.
Awesome. Could you elaborate on the technology advancements and innovations planned for liquid mining in the near future?
Sure. So one of the things that we've seen since we've been involved is we watched the efficiency of the machines improve dramatically. When we first got involved, the machines were generating right around 100 terahashes per second, but the wattage for each one of those machines was somewhere in the 37 to 38 watts per terahash range. We are now buying machines that are in the 21 watt range per terahash and are generating 160 terahashes. So the efficiency has gone way up, the capacity has gone way up, and we expect to see that only continue, where we'll see both the efficiency and the capacity of the equipment continue to increase. There are also machines now that we can get that are cooled slightly different from immersion. It's called water cooling. We haven't fully switched to that yet. We're looking at getting one container, which will hold about 200 of them. They're cooled by water, so the water circulates through predefined channels that cool the ASICs on the chips. The reason we haven't gone to that completely is because it's not keeping the power supplies cool at the same time. So we're going to buy one container and test that out, because we do think that that is probably the next evolution. We'll probably do the immersion cooling and the water cooling side by side, but those machines also are around 20 to 21 watts per terahash, but they also can generate up to 330 terahashes per machine. So once again, a massive increase in capacity and a very big reduction in power. So think about that. We're cutting our power needs by a third from where we were buying, which was initially 37%, but then 37 watts per terahash. But the bulk of our machines are actually below 31, and now we're buying them at 26 to 21. So our main focus right now is to drive down our consumption so that we're spending less money on electricity and therefore increasing our profitability. We also have some proprietary methods that we employ that I won't get into detail on, but we're able to make effectively 2 machines the equivalent of 3. And that allows us to get much more capacity for a lot less money. And it's like getting 3 machines for the price of 2, kind of similar to what I said earlier about immersion cooling, but this is an additional step that increases it even more. So that's one of our own internal proprietary methods that we're working on. We're also looking at methods for electricity generation. So, we have the grid power, which we use, but we're also very interested in solar and wind, and the cost per megawatt is coming down. And when I was at the Bitcoin convention in Miami this year, we met with several energy providers of wind and solar, and they combine those together and they use the grid as a backup. So we're looking at that as well, because our combined cost on that would be somewhere around 4 cents a kilowatt hour, or $40 a megawatt, which would save us about 25%. And finally, we are sourcing electricity all over the world. So we are now looking at other areas of the world to deploy our equipment, because we have seen rates as low as 3 cents a kilowatt. So our primary job, we feel, is to not only get the best equipment for the best price that drives down our cost of power, but increases our capacity. And if that means we go to a different part of the world to do that, where we feel that the environment is safe to do so, from both and not just from an economic standpoint, but also from a risk standpoint, then we'll take advantage of that.
Awesome. We have a question here. Are you possibly planning to add multiple locations in the States?
Yeah, so we have 1 location. We have 2 more coming online right now that we've already signed leases on. So they're all in Southeast Michigan. We're negotiating in other states right now. We do have negotiations going on in Western Michigan with a separate utility company. We were just on negotiating with not a utility company, but a aggregator of power in Ohio. And we're trying to see if we can come to an agreement there. They're going to have 1.2 gigawatts of power available overall. And it would take us a lot of money to deploy 1.2 gigawatts, but it would be nice to know that we had an almost virtual, source of power that would be available to us. So we are looking in other states. In fact, been working with FP&L for Florida. We've also been in discussions with some facilities out in Texas. We're a little concerned about Texas because they get exceedingly hot there, as you may know right now with the weather. As much as we complain about the heat here, they've been well over 110 degrees, and that's the temperature, not the heat index. So that might be one of the last places that we go to, if at all. But Tennessee, Georgia, Ohio, Wyoming, there are plenty, even North and South Dakota are good states to go to. So we're very open. We're negotiating now. We actually have a flyer that I can, if anybody wants a flyer, just let me know in the chat and I'll go ahead and make sure you get that flyer sent out to you.
Thank you for that, Rick. Are you looking to expand into other markets within the crypto space?
So I don't think we're expanding into other markets besides crypto, although we do plan on being totally vertically integrated. And what I mean by that is you want to be able to control your own destiny. We want to know that when we need equipment, we don't want to have to rely on getting it from a supplier or multiple suppliers, just due to the risks that we saw with the supply chain due to COVID. So ultimately, we do plan on building our own machines. So that's not as difficult as it sounds. There is some work that has to be done in order to do that. But that would come down the road a little bit. Some of the other things that we want to be able to do is control our own power. And so I think there will be a time in the not too distant future where we will negotiate with the wind and solar manufacturer or installers to build out X megawatts of power and then use the grid as a backup. We may get involved in other currency or coins to mine. The only reason we're totally focused on Bitcoin and Bitcoin Cash right now is because the SEC and the IRS have both deemed it as property, not a security. So we don't have any of those risks there at all. So we're just trying to stay away from any issues that could be opened up through someone considering something a security. And as that dust settles, we may expand what we mine, but I don't believe we'll expand out of the crypto space. And I'm using that in a very general term, but more specifically, Bitcoin, Bitcoin Cash, and potentially Litecoin as well.
Thank you for that. We have another question here. What would you say are the top 3 reasons to invest in liquid mining?
Well, I say the top 3 right now. Number one, and people may not realize this, but Bitcoin just emerged out of its longest bear market since inception, which was January 2009 in June. So it was the longest bear market in each of the cycles that it's had. It's had 3 cycles. We're actually in the 4th cycle right now. And a cycle is where Bitcoin goes from what's effectively called the accumulation phase, and then it goes through a spike, and then it goes through a decline. And it's done that after each of the last 3 halvings. The 4th halving, and just to clarify what a halving is, the halving happens every 210,000 blocks, which is about every 4 years. And the first halving, Bitcoin went from getting 50 Bitcoins every 10 minutes for a block reward down to 25. And then in 2016, it dropped from 25 to 12 and a half. In 2020, it dropped from 12 and a half to 6 and a quarter, where we are today. And sometime around April of 2024, it's going to drop from 6 and a quarter to 3 and an eighth. And then it'll drop to like 1 and 5/8. And then finally, it'll drop below 1. So this may be the last really significant opportunity for a halving to have real impact on the cycle that Bitcoin's in, because the future impacts will be less and less impactful because the numbers are getting smaller and smaller. We do expect to see Bitcoin continue to increase in price, not so much from the halving, it's just that the global adoption rate is continuously increasing. And although there's a lot of confusion and what we like to refer to as FUD, fear, uncertainty, and doubt in the US around Bitcoin, it gets lumped in with crypto, which is unfortunate, but it is what it is. And so there's a lot of false information out there. We expect to see a lot of that sort itself out as the SEC and hopefully the Congress come and give some greater clarity on regulations around the market. So we do expect to see things start to sort itself out, and we may get involved in other we'll call them coins for now, to mine once we get some greater clarity. But it's not just clarity we want. We want to make sure there's a long-term viable business reason to do the mining. And if that exists and we have clarity, then we'll mine that as well.
Awesome. We have one more question here. What would you say to a potential investor that's on the fence? What makes your company a lucrative investment?
Well, I think I've answered this a couple of times, but I'm going to just kind of summarize it again. So when you make an investment in most other companies, you put X number of dollars in. Usually you get some sort of common stock, or maybe you get a safe, which is a security with a future value to be determined. And what we wanted to do here is make it so that the investor felt secured. Not only did they feel secure, but also that they were getting some return on their capital while you're waiting for an event that gives you some sort of multiple of return on your money, which was the main reason that you invested. You don't invest in startups just to get a 6 to 8% return. You're looking at an investment to give you, some sort of multiple, 5x, 8x, 10x, 20x, whatever that number may be. But sometimes you have to wait years, and sometimes even as long as 10 years to see that come to fruition. And if technology changes along the way or something happens, that business plan might be obsolete. No different than what we're doing in mining. But here's the main difference. One, We are giving you a return on your investment from day one. It gets paid by the 10th of the month following the end of the month, every single month. So that's number one. You're getting a return on your capital. Your money's working for you while you're waiting for some sort of liquidity event. Two, we utilize equipment that we purchase as security for your investment. And most other investments, you're just a common shareholder, so that if there is some sort of liquidity, event which causes the firm to go out of business, then you're just another creditor. Here, you as a preferred shareholder. And by the way, I didn't say this in the beginning, so I should say this now. This is currently for accredited investors only. And what that means is you have to be earning 200,000 a year, at least 2 of the last 3 years, or 300,000 as a couple, or you have to have a net worth excluding your home of over $1 million. So that's the criteria for an accredited investor. Our investment that's coming out in the first quarter of 24 will be a Reg A. And once again, those limits are totally different where anybody can invest. I just want to make sure I touched on that. So we have the security of your investment. We have the principal earning interest right from day one. So I think those are the two primary big differences that we offer versus most investments. And then I think the third is the unlimited cap, not cap, the unlimited potential for interest. And as I showed on the spreadsheet, very small changes in the income we're earning on Bitcoin mining can have a dramatic impact on the rate of return that the investors are earning. You know, a 2-cent increase, you saw the interest double in the first year and almost quadruple by the time we got to the third year. So once again, very small incremental increases in income per day have a dramatic impact on the amount of money that an investor will earn. I think those are really the primary ones. Oh, I started to say something previously. Let me catch back up. You asked me, I think the previous question was, what are some of the main reasons to get involved now? And I said that, Bitcoin came out of its longest bear market. I think one of the other really interesting recent developments are that the large financial firms, global financial firms, are really getting on board with Bitcoin. BlackRock, the largest financial services firm in the world with just under $10 trillion under management, just filed its Bitcoin ETF with the SEC. But they were quickly followed by Fidelity, WisdomTree, ARK Investments, and a pretty extensive list of other filers that filed right on their coattail. So when you see the amount of money that's in the financial services industry, and also the other, going into the Bitcoin market, I think the saying on Wall Street is follow the institutional money. Well, the institutional money is trying to get into Bitcoin. So I think that in and of itself makes this a great time to get involved. And then lastly, I would say Larry Fink, who's BlackRock's CEO, and you can Google this, said that he thinks that Bitcoin is an asset, a global asset that will protect you against the devaluation of your currency, no matter what country you're in. And I think that's a very important statement. He also says he believes it's the digitization of gold. And so I think for all of those reasons, now's the time to get involved. So the last thing I want to say, it's not your question, Richard, but I'm going to answer it anyway. Why get involved in liquid mining versus just buying Bitcoin? Well, when you own any asset, whether it's Bitcoin, a house, stocks, they can only do 3 things. They can go up in value, down in value, or stay the same over any given period of time. So this is a 3-year hold on this investment, unless we are able to create that liquidity faster, as we discussed previously. So during that 3 years, that initial investment can go up, down, or stay the same, being Bitcoin. However, with our investment, we expect that you'll get a very nice return on your investment, greater than 10% average, and you'll also get your investment back. So if Bitcoin were to stay the same or actually go down in value, you would way outperform that. And if Bitcoin goes up, you would outperform it again. And we could actually see that in a spreadsheet, and you could see how that gets modeled. But the way we have it structured is that you would earn more money even if Bitcoin goes up dramatically, if Bitcoin stays the same and if Bitcoin goes down. So the way we've structured this is so that our investors, specifically our seed investors, make money no matter what goes on with Bitcoin. I hope that helps clarify some things a little bit.
Awesome. Thank you for that, Rick. Well, we don't seem to have any more questions coming in. For everyone in the audience, I do want you to know that this webinar was recorded, and then we'll be posting a recap of this live event around next week, thereabout. Rick, do you want to leave the audience with any final thoughts before we wrap here?
Yeah, I'm actually going to go into the chat, and I'm going to go ahead and put let's see, let me get chat here. There we go. Okay. So if you have any questions and you'd like to talk to me, I'm going to put my calendar link in here. Feel free to go ahead and schedule a time. If you wouldn't mind, schedule a 30-minute video call. You don't have to be on video, it's one of the time frames, and that'll make it easier for us to be able to make sure we answer all your questions. And then lastly, I'm going to put the link to our investment page where you can learn a little bit more. And okay, so I just put those two links in the chat. Feel free to click on those and either set an appointment if you'd like to talk a little bit further about liquid mining. If you have questions that didn't get answered today, or something you want to get off your chest, or whatever you want to talk about regarding liquid mining, happy to do that, or Bitcoin mining. So anyway, with that, I am done. I hope everybody enjoyed the presentation. And if you want to give me a shout, look forward to talking to you.
All right, Rick, thank you for being here today. Have a good one.
Thank you.